Hello, today we are going to talk about Indian stocks. Stocks. The benchmark BSE Sensex gained 177.04 points, or 0.28% to 62,681.84, while the broader Nifty gained 43.8 points, or 0.24%, to 18,606.55. Following Asian peers that rebounded following China's decision to support property developers in order to boost demand. Rupee. In another quiet session, the Indian rupee USD traded at 81.72 per dollar, losing 0.06% against the US dollar. Unable to take advantage of the generally positive Asian cues, the local unit held a narrow trading range. Bonds of the government. The benchmark 10-year bond was quoted at 99.85 rupees and yielded 7.2791%, up from 7.2736% at the previous close. Investor sentiment was impacted by the recovery in global crude oil prices, and some traders also reduced their holdings ahead of the GDP data that will be released on Wednesday. Swaps indexed at night. The benchmark 5-year swap rate remained unchanged at 6.28%, while the overnight index swap rate for 1 year decreased by 1 basis point to 6.65%. Repos money call. The overnight call money rate in India decreased by 10 basis points to 6% from 6.1% during the previous session. The overnight TREPS rate was 5.74%. Compared to the weighted average of 5.9677% from the previous day. Oil and Natural Gas Corporation's research report by Prabhudas Lilladher. We increase our FY 23-25 earnings by 4 to 63% to account for higher crude oil realization to $81.73 BBL from $73.70 BBL earlier, with 188.1 billion rupees. ONGC's standalone EBITDA in Q2 was lower than anticipated. PAT of 128.3 billion rupees and PLE 201.7 rupees billion. PAT benefited from higher other income and a lower tax rate of 9% as the company moved to a lower tax regime. While EBITDA was hurt by lower oil and gas volumes than anticipated, due to HPCL's losses, Q2's consolidated EBITDA PAT stood at 165.7 billion rupees and 68.4 billion rupees. ONGC's crude oil realization will be less than $73 per barrel as a result of the government's recent decision to impose windfall taxes. As a result, ONGC will not benefit from high commodity prices, but gas prices will remain healthy. According to Director Sanjiv Bhasin of IIFL Securities, a correction in the markets is likely to occur in January, making it a good time to take some money off the table. In an interview with CNBC TV 18, he stated, "If you've had a very good spell in the last 4 months, it is good time to take some money off the table, particularly some of the PSUs, and wait for the immediate correction, which may arrive in January." In the meantime, Bhasin maintains his belief that the stock market has yet to experience some upside, with the Nifty 50 possibly reaching 18,800 to 18,900 points. On November 28. The Nifty index reached a new high, and many stocks made new 52-week highs. Bhasin also criticized foreign institutional investors for selling stocks quickly when the Nifty reached 15,500 points because he believes that India is the best market or player in town. Read also, Powell's contribution to China's revival, 4 global themes that will define investing in 2023, according to him. However, he advises market participants to sell the greed as now the greed is evident, and begin taking profits from their existing investments. He continued, "This is the day, and this is the time you must begin to book profit. Take some cash with you, as this is not the time to continue being adventurous." Thank you for watching. For more financial news and info, don't forget to hit the like and subscribe buttons.